All right, traders, it is time to prepare to trade the best setups at the best prices. In last night's video, we spoke about a pattern that we were looking at, which was SPY was going to gap down and drop first, which it did. Then we were looking to buy call options for a bullish recovery in a bear trap, which did not happen at our key levels. The team and I were able to avoid buying call options at bad levels. I did end up having two call option trades. One was on SPY and one was on Google. Both were nice wins. I'm up nearly $3,000 on the day. The green streak continues. This is now my 14th green day in a row, but I got to give a big shout out to G-Roar because G-Roar is up over 2,400% on his account today, day trading SPX contracts. He alerted over 8 wins today and he absolutely crushed it. And the entire team is green on the day. We did not have one single person go red on the day. My trades were spot on, but the big shout out goes to G-Roar. And we're going to be going over his trading strategy and some of the trades that were made towards the end of this video. But first things first, let's start off with the preparation. So in terms of the preparation, we were looking for a move down, a gap down first. That pattern that I showed you on the SPY said that it was going to drop first and then it was supposed to have a bullish recovery. This was the pattern. This big red candle, and then you could see the next day it did gap down and it did drop first, which is what ended up happening. It did gap down and it did drop first, but it did not have that bullish recovery. So in terms of the levels of interest for calls, the levels of interest for calls for that bullish recovery were at $437. And in terms of 437, that already blew through in the pre-market. So that's no longer a key level because it's key resistance in the pre-market. So we were able to prevent buying calls at that level because it simply cracked through in the pre-market, which means history is not repeating itself, which means that that pattern that I pointed out where we measured the move where SPY was supposed to drop 2 points and then recover is not repeating itself, which means that pattern is showing signs of being irrelevant because it's not bottoming at the expected price. And then in terms of our other level for calls, it was $435. In terms of $435, that key level, if you take a look right here, in a sense, it did work. As soon as we hit $435, we went to $435.60, which is a nice quick scalp you could have done in 3 minutes. So the 435 lower level worked, and I was not expecting a drop lower than that. So I ended up creating new key levels within the Discord section. And our next key level for calls, which was $433, as you can see right here, 433 is the next support. As soon as SPY went under 433, I told my team it's likely going to spike and then it's going to crash. G-Roar was already in puts. He was already up on his put options. As soon as it went under $433, SPY did exactly what I said. It literally spiked 40 cents. Calls went out of the money, straight back in the money. It spiked 40 cents, and then it dropped lower. Exactly what I said, man. The analysis given today within the team was extremely accurate. But again, I got to give a big shout out to G-Roar because his 8 wins today were truly unbelievable and truly phenomenal, man. He has made a lot of people money just within this week alone. So with that being said, in terms of the new trading plan, man, let's get into this. So I'm still looking for the bear trap. I'm still looking for that bullish recovery. And this is what you need to understand. Based off of this daily candle, with the way that we're gapping down, what it's telling me is it is going to try to drop again first, and then it's going to have that bear trap. So that's what I'm going to be looking for. Now, in terms of my key levels for call options, this is what I want you to understand. Right here, we have key support. And tomorrow, extended hours is going to be extremely important. So I need you to pay attention to those pre-market lows and those pre-market support levels. If you're seeing SPY bouncing off major pre-market support, that will be one of our key levels to buy call options for the bear trap. In the meantime, these will be the levels that we will be keeping an eye on. It's going to be hard to find that bottom, so we're going to need to wait to see where the bears are getting trapped, whether that's in the pre-market or whether that's one of our oversold key levels. So our first key level is right here. SPY has a gap that is waiting to fill below at 431.50. It literally closed right at the gap. This is make or break support. If it blows through, the next support level is going to be right here on the daily chart. As you can see, our next support level is a gap that is waiting to fill below at 429.90. That is a very key level of interest to be buying call options in the 429 to 429.90 zone for a gap close reversal. Now, if we go under that, we get stopped out. This will be our final level to buy call options, which is going to be right here, $426. $426 is extremely strong support. So what we are watching and what we understand right now is the SPY is going to have a move. It's going to try to have a move down first. We shall see. Right now, it's at key support at 431.40. This is not the best gap. The best gap that has not been filled is right here at 429.90, which is a very key level of interest. And then your very strong, heavy support, which should not go under, is $426. That should not go under heading into tomorrow. So those are our plans for call options. Those are the levels where we will be interested in buying those call options along with the pre-market lows. Well, another tip I can give you is just identify where the bears already got trapped, whether it's in the pre-market or towards market open. And then once you see and identify the level where the bears got trapped, go with that level. That's going to be our game plan for call options tomorrow. Now, in terms of put options, what are we interested in doing with put options? So in terms of put options and shorting the overall market, this is, and by the way, 431.40 is key. So if we're gapping up and SPY's breaking out and SPY's going bullish, then we're buying calls at 431.40. If it's looking bearish, gapping down, then we're looking at the lower levels, 429.90 and 426. So write that down. Now, in terms of shorting the market and buying put options, our new best level for put options is going to be the gap. We now have a gap that is waiting to fill above right here at 438.64. So this zone right here, which is going to be 439 to 438.64, will be our new best zone where we are waiting to buy put options and short the market. Once we hit that zone, we should drop first. That's going to be an amazing trading opportunity for put options. Now, are there any lower levels of interest with my trading strategy where we are interested in potentially shorting the market and doing put options? It's a little tough because on the daily chart right now, we're a little bit oversold for the micro. That's why I'm mentioning that very high level, which is going to take time to hit and we're going to have to wait for. So it's just a little bit tough for me in terms of the put options and going short because you guys know I like going with the overbought levels and SPY just had a drastic move. So right now we're looking for that opportunity to catch that falling knife in a sense with the proper confirmations like we do on the 30-minute chart. So if I were to go with any other level for put options besides 438.64, let's take a look at the chart right here. We have a lot of key resistance at 436, but honestly, guys, it's going to be tough. It's going to be tough to go with lower levels, but I'll keep an eye on 436. It's going to be tough, and I'm really not too interested in doing anything else. So what I'm going to give you from here in terms of speaking, within this video, in terms of, what I'm going to give you right now is a price ladder. So if one of these levels reacts as a support level, it's going to go up to the next level. If one of these levels reacts as a resistance level, it's going to go down to the next level. So let's start off with the exact bottom. So $426, that's the bottom of the ladder. The next ladder is 429.90. That's a key gap where SPY is going to try to bounce first for in the money calls, meaning when SPY goes under 430, it should bounce above 430 first. Our make or break support right now is 431.40. I'm only interested in buying calls here if the SPY gaps up or if it has a very, very nice move up towards the morning. If it does, then I'll look to buy calls at the 431.40 level. If we're gapping down looking bearish, I'm buying 429.90. If I buy calls there, I get stopped out, I take a small loss, I wait till 426. I don't hold my hopes, I don't take big losers. If it has a small move against me, I will look to get out of the position in most case scenarios. Now, our next level above that in terms of the price ladder, so again, I'm not interested in these overall levels, but the next level above 431.50 is going to basically be $433. $433.40. The next level above that is going to be 434.30. The next level above that, and SPY will try to drop here first because these are 30-minute bearish wicks right here, 435.50. It will try to have a small drop there first. The next level above that is going to be the gap breakout strategy. Once the SPY hits 436, it's make or break resistance. If it breaks above, reacts to support, it goes super bullish to fill the gap at 438.64 to 439, which is where we want those puts, right? Next level above the gap is going to be $440. Next level above that is going to be $442. Next level above that is going to be $443.80. We want puts there. And then the next level above that, $446.50 to $447. We want puts there. Next level above that is going to be $450 gap. We went over that in yesterday's video. That is the new price ladder, my friends. That is what we are interested in looking to do headed in tomorrow in terms of the videos that I make. You guys need to understand, I was green today because I did not blindly trade my plan. I trade what I see. I react to the market. I'm a trader. I don't just make a plan and post it on a YouTube channel and just blindly follow that plan. I know my levels, I know my ladders, I know my key levels, and I react to them. I respond accordingly. I see if there's a confirmation. I trade what I'm actually seeing. Now, in hindsight, in advance, I do have some understanding, if I'm long biased or if I'm short biased at this level, but I'm not going to blindly trade my bias. Like I said, in terms of the pattern that I saw in yesterday's video, it said it was going to drop first, and then we measured the move. And the measured move says if history repeats itself, it's going to try to bottom at 437 to 435. Now, in terms of history not repeating itself, it was already selling off at 437 in the pre-market. So there's your hint right there that it just cracked through 437 and it just cracked through 434. Therefore, history in that pattern is not repeating itself. It was because it moved down, but it wasn't because it wasn't having a bear trap. It just kept on dropping and all the 30-minute candles were red. So you have to actually trade what you see. But the beauty of that was I didn't swing trade and I'm not a gambler. So literally, I didn't have to do anything. It just blew through all my key levels. And I said, wow, this is bearish. I'm just going to wait for better levels, which was the next one on the daily chart, which was 433. So the gift was to just not even swing trade. That right there was the gift in a sense, because it just blew through all the key levels in the pre-market. And then that's where Trader Society comes in handy, because we actually trade what we see and we update the new key levels, which we did. Like I said, the 433, the next update was 433 is the next support level on SPY. As soon as it hit 433, it dropped 10 cents. Then it spiked 50 cents. And I told my team it is going to spike first when it hits 433, which it did. It spiked 50 cents. And then it's going to drop after that. G-Roar was in puts, man. This guy's an absolute monster. He was in puts, G-Roar. He's up over 2,400% today on his account. Guys, do you understand what you can do with SPX contracts? So the difference with G-Roar is, and what he's so great at, is day trading. That's what he does. He doesn't scalp. I scalp very, very quickly within a couple minutes. My average holding time is probably like 3 to 5 minutes. Very, very quickly. Now, within that 3 to 5 minutes, I can make a 20, 30, 40% return, which is amazing on SPY contracts. But what he does is he has a strategy that's the absolute best, because it offers the best risk to reward ratio. He makes the biggest percentage gains. That's what he does. So he trades SPX contracts and he holds them. And he holds them, for like 15 minutes, 30 minutes, 45 minutes, an hour. He's a day trader. He's not a scalper in a sense. He does scalp too, but he's mainly a day trader. And he hits big. So with him, he'll lose when he loses, which is, his win rate's 85% of the time, right? So when he does lose, his contracts go like worthless. He'll lose like 50%, 60%, 70%. When I lose, I don't lose a lot. I lose like 10%. But again, position sizing, that's the name of the game. He works in percentage tiles. So his gains come from percentages. That's the point. If he has a loss, it's like 50%, 60%. The contracts go worthless in a sense. Now, when he has a win, he hits big. 100, 200, 300, 400%. And he's hidden sometimes 5 trades, 10 trades on the day with only one loss. It adds up and it compounds to multiple 100% returns, if not 1,000% returns. Yesterday, his account was up over 75%. Today, he's up over 2,400%. And I believe he cashes out every single week. So the point is, in a sense, like let's say, in that situation, if you were putting in $5,000 in every single trade and you're up over 2,000%, you're literally making 100K in profits. It's absolutely insane what you can do with that day trading strategy. That's a strategy right now that I am, learning and back testing, his trades and following in a sense, but not blindly following. I took one of his trades. I don't take all of his trades, but I took one of his trades today. He ended up alerting Google call options. And the reason why I bought Google call options was it had the same daily pattern that I showed you guys in yesterday's video. Right here, Google had, key support. It had a gap to fill at 129.80, and it had very, very strong support at $130.14. So G-Roar ended up alerting that he was in call options on Google. And I don't like blindly following anyone, but if I were to do it, he would be the only one I do it. But me personally, I do not like blindly following anyone, and it's something I would rarely do. So I looked at the chart and I said, is there something here that I visually see where this makes sense? And then I would kind of use him as a scanner in a sense, because he put me onto the idea. So I then looked at the chart and I said, okay, this is a bullish 30-minute candle. And I talked about this all the time. This is how I was able to nail a nice dip buy on SPY calls today. This is a very nice bullish 30-minute candle at key support. And when this hits key support on a daily level, or one of our key support levels, this, it's supposed to spike, and it's supposed to retest 131. So when this 30-minute candle closed green and bullish like this, I bought call options, and I bought the 431 calls. As soon as the calls hit in the money, I sold the calls for profit. Made over a 15% return doing that very, very quickly, $1,600 profit. And that was that key support. So I use that 30-minute pattern all the time. That's what I like doing in a sense. And he brought awareness to that trading idea to me. And you could have done the same exact strategy with the SPY. Right here, the SPY formed that same candlestick at key support. So our key level for calls was 435. It was at a lower level. So if it's at a lower level and it forms a bullish confirmation on the 30, that means it's more oversold. That's even better. That's great. So when SPY forms this green bullish 30-minute candlestick right here and it closes like this, it's supposed to try to retest the high of this. So when this 30-minute candle closes like this, you buy towards the opening of the next one, and you can add if it drops, and then you kind of average into the add, and then you sell into the spike. Your price target, your profit target is towards the top of this wick. It's supposed to retest the top of the wick, right? And you could see it did it again. There was a green bullish wick right here, and then later on, what did it do? It retested the high of the wick. So it works, man. And you could just visually see bearish confirmations, and the reason why people were doing put options within the chat. 435 was an amazing level for call options, but it cracked, which is bearish. And the SPY had key support at 435, 434.45. Well, guess what? When it cracked that support and it spiked back up, it was retesting the high of these wicks, which is bearish. That's where the SPY was dropping from the high of these wicks. We were buying calls towards the low of these 30 minutes, selling towards the high of these wicks, especially with Google. And you can see a 30-minute bearish red candlestick right here, previous support, reacts as a resistance because it cracked. That's the new lower high. And this is a 30-minute red bearish trend reversal candlestick. Then it's supposed to drop and go lower, which is another reason why people banked and shorted SPY on the put options, right? Now, I will say this. I'm going to throw this in towards the end. I will be keeping an eye on this right here. Extended hours always catches my eye. I'll be keeping a close eye with a very, very tight stop because I know this is not the best level for put options and going short at $435. 435 to 435.50 is a key level where I'm interested in going short. Next level is 439 to 438.4. I'm going to leave it off at that. So here's the deal, guys. Trader Society, we are going to be raising the price very, very soon, and there's going to be big changes to the companies. We're going to be launching new programs, more mentorship. A lot of new things are coming, like trading bots, algorithms. We have a lot of things that we've been working on behind the scenes, and the prices will be going up a lot very, very soon. So if you do want to join, this is the best time to join. It's the first link down below in the description. The amount of value that was recently added to this program alone, literally just with G-Roar stepping up to the plate, him and I have fused together, and we are on a tear. We are tearing it up. This is now 14 green days in a row, and we're absolutely crushing it, man. This is the guy. He's the best day trader that I've ever seen. He's the best day trader that I've ever come across. I'm the best scalper. He's the best day trader. And I'm telling you, man, we are going to be raising the price a lot. And it's likely going to turn into like a private network in a sense. We're going to have to see. But there's major changes coming. And what I'm telling you is if you're serious about getting in and getting the best deal, this is the time. This is the time to invest into yourself. This is the time. So I would encourage you to do so if that's what you're interested in doing. It's the first link down below in the description. I will assure you this, man. When you join this chat and you see the trades that we're making and the trades, that I'm making, the trades that G-War's making, you're going to be asking every single second, how are they doing this? It's like the market makers. How are they doing this, man? And I'm telling you, man, we're going to be creating a lot of programs, a lot of education, a lot of training. There's going to be so much more in the near future. This is truly just the beginning. So if you're serious now, this is the best time to invest into yourself. It's the first link down below in the description. It's a one-time fee. It's a lifetime access. Very, very soon, we will be raising the prices, and you're going to see a lot of major changes, and these major changes are going to be for the better. The value of the program has gone up so much, and I'm going to be applying myself personally a lot more to the program, which is another reason why the prices are going up, along with a lot of new features and new benefits and things that we've been working on behind the scenes that will be added in the near future. I will see you guys tomorrow. We will absolutely crush it. And Fridays are known for being my best trading days. So we will absolutely crush it tomorrow. It is going to be the 15th green day in a row. We have a very solid trading plan lined up, and we will continue to crush the market. We will continue to trade what we see and never blindly follow anyone's plan. And we do understand we have a price ladder, we have a key levels, and we may be bullish or bearish in hindsight at a level, but we trade what we see and we react. And if it's not reacting the way we want it to, then we do the opposite of what we want it to do in the first place. We do the opposite of the bias, or we just don't trade and sit on the sidelines and wait for a better level. So I'm gonna leave it off at that. I will see you guys in tomorrow's lesson.